What's going on, everybody? It's going to be our Summary Markets episode 135. This is going to be a major week because we are finally at the FOMC statement and press conference week. So September 21st, which is this Wednesday, will be the FOMC meeting. They will announce the rate hike, which right now the market is pricing in about a 50-50 chance between a 75 basis point rate hike and a 100 basis point rate hike. And I didn't see any numbers change with that kind of percentage chance. So I think we are about 50-50 on that still, but we might get a difference on tomorrow. Might have a change in that on Monday. So keep your eye out for that. We don't really have any major news on Monday. Nothing really major on Tuesday as well. We do have a couple of real estate numbers coming out on Tuesday. So we have the building permits and the housing starts. And then we have on Wednesday, the existing home sales in the morning, crude oil inventories as always. And then we have the Fed meeting right after that. Thursday, also pretty small. We have unemployment claims coming out in the morning. And then we have a PMI data point on Friday. And we also have Powell speaking on Friday. Let's see what he's speaking about. Due to deliver opening remarks at the Fed Listens event in Washington, D.C. So pretty big event there at Friday on 2 p.m. And that is the week on the calendar. So really all you want to watch out for is the Fed meeting on Wednesday and the PMI on Friday. Okay, so keep your eye out for that. Typically on Fed weeks, as you guys know, if you guys watch my stream or you watch my weekly videos, they are typically balanced. So what you want to look for is that ranging kind of mean reversion style of trading, and you want to watch for that weekly open. So you want to look for where the weekly technically opens, which would be today at 6 p.m., or you could look for the cash open on Monday at 9:30 in the morning. But both of those levels will be extremely important moving forward for the rest of the week. Now, typically, when you have these Fed weeks, that weekly open will act as a major magnet. So if you try to push away from that level on Monday or Tuesday, it will typically come back to that level before the Fed meeting on Wednesday. And then once the Fed meeting has happened, you can begin to push away from that weekly open. But just know that on Monday and Tuesday, you do not want to be trusting any major moves that push away from that weekly open. Okay, you want price to kind of mean revert back to that weekly open, which in this case, we don't know exactly where it's going to be, but we can say that it's probably going to be somewhere around 38.90 because that's where we closed on Friday. So let's take a look at how we closed on Friday. So if we look at this level right here, where's my horizontal tool? Here it is. If we grab the low right here, we can see that we swept the low on September 7th. So we broke the low there, and we actually closed back above it, giving us that kind of swing low failure with that hammer candle. So the candle didn't close green. It didn't close too far off the level. If it would have closed somewhere around like 3,900 or higher, then it would have been extremely bullish. But it still wasn't too bad of a candle. It actually looks decently bullish going into the weekly open. Now, if the weekly open can maintain above 38.90 and kind of hover around that 3,900 or higher level, I would definitely be leaning slightly bullish going into the Fed meeting. But obviously, your bias does not matter. It does not matter if you're looking bullish before the meeting or if you're looking bearish. However the market reacts to that meeting, it is going to dictate the rest of the week and even next week as well. So don't become super biased either Monday or Tuesday. Like I said, if it starts nuking below this level, I would not become extremely bearish because it very easily could pop back into that weekly open. And same thing for bullish. If it starts to bounce very heavily, maybe into 4,000, you want to look for that pullback back into the 3,900 area, okay? So let's say after the meeting, if we start to move very aggressively, what levels do we want to keep an eye on? So the first level we want to take a look at is the accumulation down here. So we had this major accumulation back during the June low, which you can see is still our local bottom. So if we grab a volume profile tool from kind of where we started to bottom out here to where we started to break out of that range right there, we can grab a few levels. So we have the value area high right here. which is actually lining up almost perfectly with that low. So we're going to go ahead and delete that low for now. And then we are going to grab the value area low. And then we are going to grab the POC as well. So we can say that if we start to push bearish after the Fed meeting, these are the levels we want to keep an eye on. So this level has already been hit. So if we start to hold below this level Wednesday or past Wednesday, you want to look for these lower levels around 37.71 and 37.43. Okay, if you start to get extremely bearish, then you want to look for the range low way down here, which has not been tested. Okay, so we know that there's resting liquidity below that level because it has not been tested before. All right. Now, if we start to get bullish, what do we want to look for? There are a couple levels here, and the easiest way to grab it would be to go down to a 30-minute and find where the value is on these sell-off days. See if we've tested any of these prior value levels. So this level right here, we have not tested. So we want to grab that value area low. We want to grab the value area high here as well. You could also grab the POC if you would like as well. So these will be the most nearby targets, I guess you would say, the local targets. And then if we start to get extremely bullish, we want to look for this sell-off day right here on September 13th. So we're going to go ahead and grab that POC, and then we're going to grab the value area high right there as well. So these are all of our untested value levels that are above us. So if we do start to get extremely bullish after that Fed meeting, which is unlikely, but we do want to make sure we have a scenario set if that happens. So we want to look for 39.18, 39.34, 39.57, 4,003, and finally 4,052. I know it's a lot of levels, but just take it step by step, excuse me. You want to take it one level at a time. Once we start to break one of those levels, just move on to the next one. Make sure you are keeping in mind the 80% rule. This will not be exactly what the textbook teaches as an 80% rule, but basically you can call it a value retrace rule. So if we start to hold back above the value area low, and it starts to have 30-minute closes above that level, you do have a very high chance that you're going to see the value area high. Okay, same thing back here for that value area high. If we start to hold below the low, which in this case would be lining up with this level here, 39.58, you have a high chance of getting back to at least the POC or the value area high. Okay. All right, let's move on to Nasdaq. And since you've already seen where we're getting these levels from on ES, we're going to do the same exact thing on Nasdaq. So we're going to grab the accumulation from back here. We are going to grab the value area high, the value area low, and then the POC. Same thing, if we start to lose those levels, the final target for the week would be the low down here. And then for our upper levels, we just have to go down to a 30-minute chart and look for untested value. So we have tested that low, so we want to grab the POC. We want to grab the value area high. And then we have to look for some higher levels. So we've already tested these levels here. Have we tested the POC? No, we haven't. So there's another level there. And there is another level there on the value area high. Just giving you guys an idea of how I do these levels. We do this basically every single week. But basically what you want to look for are the most local untested levels. Once they start to overlap, you want to ignore them because they have already been tested. Okay? So looking at Nasdaq here, what do we have? If we start going bullish, you want to look for 11,978, 12,018, 137, 304, and then 542. To the downside, if we start to break below the value area low here, around 11,800, you want to look for 11,600 and then 11,360. Okay? Final target being that low at 11,068. Now, these levels are pretty far away, the highest level and the lowest level, but because the FOMC is this week, we very easily could get to those levels if the market has a very strong reaction. Okay? All right, let's move on to crypto. So if you guys watched my weekly video, I believe it was last week or the week before, we talked about how there was a fair value gap around 22 to 22.7. That fair value was grabbed beautifully, so it tested that value, it wicked the top, and then you just completely sold off. Our lower targets were 20.2 and 19.7. Those have been hit. So let's go ahead and delete these levels and look for some fresh levels. So moving forward, we have a low right here that we want to keep an eye on. So 18.5. That would be some liquidity that we could possibly grab. You have a low right here that you could watch as well at 19.2. Looks like kind of where we're going right now. We also have some kind of overlapping value right here. If you wanted to grab kind of the value area of this accumulation, we could look for these levels. These levels have already been tested, but they could act as some kind of resistance where we could get some breakouts, or some support where we could get some breakouts as well. So if we look at this value area high there, and then the value area low right there, it gives us an idea of kind of where we're leaning. So right now we are holding below that accumulation low, so we would be leaning bearish. So we want to lean into that low around 19.2, and then if we start to break that 20.2, we could look for some fair value inside this level right here. So let's take a look. We need to hide the pre-market because there is no pre-market technically for crypto. And what we want to do is we want to grab the value area low of this candle right here, and then the value area high of this candle right here. And what I want to do just to differentiate this is let's make this a dashed line so we know these are the inefficiency levels from that big sell-off. And we can go back to the daily here, and we can see that's kind of a really big value area, but those would be the bullish targets. So if we can hold above 20.8, you're looking for that value retrace back into 22.8, okay? Now, obviously, you have to watch out for the FOMC meeting, even if you guys are only crypto traders, because crypto will follow ES and Nasdaq when that FOMC announcement happens on Wednesday. So most likely, crypto is going to do the same thing we are expecting for equities, where we have a strong balance on Monday and Tuesday. You don't want to trust any major breakouts for those 2 days. And then on Wednesday, moving forward for the rest of the week, you should have a direction being created, okay? All right, last but not least, let's go to Ethereum here. So we can get rid of this older channel that's kind of already played out. These levels have also played out, so let's just clean up our chart here a little bit. And then this level right here was the low back on July 26th. It's actually double bottoming on that level almost to the dollar. So you have not swept that low, I don't believe. Let's see here. What is the low? The low is 13.59. That low that we want to sweep is 13.54. So it's actually missing that level by about $5. If you do sweep back below that level and it creates kind of a hammer candle like we see here, then you do want to lean slightly bullish. Now, we have a couple of levels here that we can watch. We have this low right here, which currently obviously has already been tested, but we can keep an eye on that for a possible deviation play. So if it swings back above that level, it would be a possible bullish deviation. And we could also look for some fair value inefficiency inside this candle right here. The way we do that is we go back to the 30-minute. We want to find where that big sell-off candle is. It's right there. And we want to grab that value area. So we have the value area low. We have the value area high. Once again, let's just make them dashed so we understand where we're getting that. And then one more thing we want to mark out, because this has this very long single print area right here, let's mark that out for a possible single print fill. So from there to there. Now, if we go back to the daily, we can kind of see where those levels are lining up. So if we do start to create that bullish deviation back above 1420, we can look for the resistance at 1520 and then have our main target be this fair value inefficiency around 1530 to 1560. Final bullish target being 1656 if it does start to explode with the FOMC. Now, bearishly, if we start to lose this level at 1350, we still have that range high way back here at 1280. And then we're looking for some value levels. If we grab the volume profile of the accumulation here. So the POC and the value area high are basically right next to the range high. So we can just go ahead and grab that value area low, and that's basically all we need here. So basically below 1284, you want to look for 1079. Now, obviously that's a big sell-off. That's like a 20-30% sell-off. So most likely not going to happen next week, but you always want to be prepared during these FOMC weeks for those major volatile moves, okay? But that is it for next week. We will be streaming back to normal. So I did miss Thursday and Friday of last week. I was out of town, but we are back to our normal schedule. So if you guys want to stop by our live stream, we will be live streaming from 9:30 to about 11:30 every single morning. So make sure to stop by from Monday through Friday for our equities live stream. If you guys enjoyed this video, make sure to hit that like button. It does help a lot on YouTube. I appreciate you guys being here as always. Make sure to subscribe if you're new, and I will catch you guys tomorrow for our morning stream. See you later, guys.